If you've ever asked yourself, can I get a second mortgage? In today's financial climate, it's crucial to explore all avenues for capital, and a second mortgage might be the solution you need. So by the end of this video, you'll know whether a second mortgage is right for you. Of course, you can apply for a second mortgage, but the rules vary based on whether you're going for a second charge mortgage or a residential mortgage. Let's break it down. So there are two types of second mortgages: a second charge mortgage, that's when you borrow against your home equity, and a second first charge mortgage where you're buying another property. A second charge mortgage allows you to borrow against the equity in your home. So, for example, if you have 100 grand in home equity, you could take out a second charge mortgage for 50 grand to use however you wish. However, you'll now have to pay both your first and second mortgage to own your home outright. On the other hand, a second first charge mortgage refers to buying another property. This term can be confusing as some people use the money from a second charge mortgage to help buy another property like a holiday home. To get a second charge mortgage, you'll need to be eligible. Your eligibility is based on having sufficient home equity, a good credit score, and passing income-based affordability checks. And remember, it's essential to ensure that your lender's authorised and regulated by the FCA, that's a Financial Conduct Authority, to avoid scams. Second charge mortgages can offer larger loan amounts and lower interest rates, but they also pose risks like repossession and negative equity. Weigh these pros and cons carefully before making a decision. Now let's talk about home equity. It's the value of your home that you currently own without any attached debt. You can work it out by subtracting your first charge mortgage balance from the current value of your home. Remember, you can't borrow against 100% of your home equity to prevent risk of going into negative equity. Even if you have the required home equity, you won't automatically be approved for credit secured against your home equity. You'll be subject to affordability checks. Now, this process involves assessing your income against all existing debts, including personal loans and credit cards, as well as your first mortgage. Is it hard to get a second mortgage? Well, it might be more challenging to get a second charge mortgage than a first charge one. This difficulty arises because you're adding more debt to your home, increasing your lending risk. However, this is a blanket assumption and not always the case. Second charge mortgages can be beneficial. They can allow you to access a larger loan amount than using a personal loan or credit card. These mortgages are often used to complete home improvements, which can increase your home's value and your home equity. However, there are multiple risks associated with getting a mortgage a second time on the same home. The main one is risking your property. If you don't keep up with your agreed payments, your home may be repossessed and the lender will sell your home. As for a second residential mortgage, it's possible to get one to buy another property. This situation involves applying for a separate first charge mortgage to buy the property and not related to your existing property and the first charge mortgage that you're paying for that. Remember, getting a second residential mortgage or a buy-to-let mortgage can be trickier than getting your first mortgage. The lender will analyse your debt to income ratio, and because you already have a mortgage, the ratio is likely to be higher. But wait, what if you don't have any equity in your first home? Can you still get a second mortgage? Well, it's important to remember that the equity is the value of your home that you own outright. If you have no equity, that means you either have other debts tied into the property or the property's value's now dipped. Now, if it's the former, these debts may make it more challenging, but not impossible to show that you can afford a second mortgage. With a second charge mortgage, unfortunately, no equity means no dice. And that's because this type of second mortgage is actually secured against your home equity. So without equity, you've got no collateral and you've got nothing to borrow against. However, the game's not over yet. You can increase your equity by continuing to pay down your existing mortgage, providing your property value doesn't take a significant hit. Now, if you want a second mortgage on a separate property, things look a little bit different. You might be able to secure a second first charge mortgage even without equity in another property. The condition? Well, you'll need to have enough money for a deposit to buy the property and show that you can handle the second mortgage. But don't forget, not having equity in your first home could suggest that you already have debts tied into it. If that's the case, these debts could make it trickier to prove that you can manage a second mortgage. It's not impossible though. It's all about demonstrating that you can comfortably handle the debt. If you're interested in finding a loan for your circumstances, simply click the link below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and it'll give you access to quotes from around the UK tailored to your circumstances. It's totally free to do, and of course it won't affect your credit score. Click the link below and fill out the short form to try it out.